Welcome back to the channel. Let's get straight to the point. What's happening right now in our country, in the United States of America, proves that Republican and Trump are the perfect example of the idiom that goes with insanity. Doing the same thing over and over again, but expecting different results. But what's more insane is the fact that they still have a huge following, and there are people that exist that say they don't know who to believe in anymore. The media is so confusing, the politicians are confusing, we don't know which way to go. So for those people and the Republicans, I'm going to make it clear there are only four options. Either Trump and Republicans are straight up idiots who don't understand anything about Shia Muslims, geopolitics, specifically Iran and the Middle East, or they are profiting so much from this war continuing by manipulating the markets and basically running an equation that they figured out is a sweet spot for Trump to renege continuously, that they are negotiating, that the MOU has passed, that they'll continue to ignore anything that is in benefit for the American citizens rather than their pockets. Or Israel has so much dirt on the Republicans, Trump, and the Epstein class that they'll continue to do what is best for Israel first only. Or it's just all of the above. They're going to continue to ignore American citizens, American exceptionalism, and American progression. They're just out here to benefit their own people, their own pockets. Politicians are liars. Everybody knows this. Historically, politicians, car salesmen, lawyers, you can put them all in the same bucket. You can't really trust any of them. They're going to find their tricks, their loopholes to benefit themselves and their own people. The main issue is with the war, we're going to continue to get hurt, whether it's economically, whether it's soldiers dying overseas, or some crazy attack that will happen in the US, which I would say is designed by Israel so the war can continue on and they can put troops on the ground in Iran. But the factor that everybody's ignoring within our government, within the Republican, is that Iran is not going to lose this war. It's been proven time after time historically. Any nation that has such strong ideology where they fight to die, they want to earn martyrdom, they don't lose because they're going to continue that mindset even if they're being bombed on the daily. They're not going to let go of their traditions. US is going to continue to spend large amounts of money, continue to bomb them, but what's happening is our ammunitions are depleting. Our war tactics are fleeting. Iran continues to outmaneuver, outleverage the US, whether it's on the Strait of Hormuz, whether it's using cheaper weaponry, and redesigning the whole format of warfare right now. Iran has accomplished that, being a nation that's been under sanctions for 40 plus years, a nation that has been basically bogged down by a great empire. We're going to continue to see elevated oil prices, whether it's LNG, whether it's crude, whether it's just like the gasoline prices when you go pump your gas, which is only going to hurt the lower demographics of the United States of America. Rich people, they'll be fine. They're going to find their way. They'll pull out some investments. They can pull out of their savings. They have assets. Where majority of the US citizens that are at the bottom, they continue to lose any growth, any amount of progression that they have seen over time with inflation just keep hiking up. And it's mainly to do with the war. Now the issue is that Trump says one thing and does another thing, and he continues to lie about this war. It all started off with Iran has nuclear weapons. They're an immediate threat to us, and we're going to solve that, which he supposedly did, right? He said we bombed the crap out of Iran's nuclear facilities and they don't have them anymore. After that, he said we bombed the crap out of their military. We bombed the crap out of their bases. Even with all that, somehow this war continues to go on. Somehow Iran is attacking ships in the Strait of Hormuz. But when Trump says we've already earned victory, it's a complete lie. Why would we be in this mess still then? Now, all this could be looked at as a miscalculation or straight up idiocracy or basically Trump and Republicans filling their pockets. Now, where the idiocracy part applies is it doesn't make any sense to what the ultimate goal for the US is, which is to separate from Chinese businesses and economics and manufacturing and supply chains. This process is a long-term process. But to me, which is basically my thesis for my investments right now, is focused on rare earth minerals, and anything related to mining, whether it's copper, gold, silver, and any other rare metals that we need to continue to advance the AI growth that we're facing. All these data centers require all this stuff. And if US really wants to get away from China's hierarchy on this, because they control 90% of the market, the only way to get away from China, I believe, realistically, is to focus on this element of growth and economics. We can almost certainly say that manufacturing is never going to come back to the US. But what the US can do is invest in other nations or within our nations to increase our mining production, whether it's on the level of getting the actual materials out of the ground or processing them. Because we have enough money to invest in this at this point, especially with the amount of money that our nation prints and all the amount of debt that we have that we don't care about. We can be investing in this and getting away from China. There's plenty of materials in Brazil and Australia and Canada and Mexico and the US, areas like Las Vegas, areas like Colorado. We have plenty of supplies. Historically, we were the number one producer of these materials, but we had to get away from it because China, it made it so cheap for them to produce all this stuff, from all facets of it, that they control the entire global supply at this point. Now, how does this apply directly to the war and why it's going to be a setback? If Trump continues this war with oil prices inflated, shipping lanes congested, it's directly going to affect our transition into us mining these materials and then processing them. It's all interconnected. One thing about the world we cannot change is the interconnectedness. What we can do is we can take pieces and bits within the supply chains and take some ownership of them. Now, I don't see China, giving up their part of the ownership in any of this manufacturing, production, processing, or any facet of the business, but we can increase our own production. So if Trump continues this war, there's going to be less money directed towards what we really need. And what's insane is all these materials are also needed to produce the ammunitions and the weaponry that is required to fight. You cannot make any of those weapons without any of these materials. So hopefully Israel and the people that are sitting up top from Netanyahu, Jared Kushner, will allow this war to end so we can focus on the economics and increasing our output of things that we compete with China against directly. And they're going to be important for our long term growth and establishing a stable supply chain. Now let's talk about the stock market. We were seeing a great push up, whether it was the S&P, Nasdaq, Russell 2000, Dow Jones. Everything was taken up, and it was doing it in a way where we were seeing some level of broadening also, which is greatly needed in the market. I know that the AI trade is still the top tier trade, whether it's semiconductors, the memory. It could even be other facets like SpaceX joining the market, but the real focus now was the broadening. We were seeing healthcare and fintech and financials getting some uplift too. But as soon as Trump came out and said the war is back on and officially saying it is a war now, we saw a dip. And what this is doing is just killing momentum. The markets are trying to basically stabilize, at the same time continue this AI growth that we need. But with Trump's like reneging of anything with the MOU and peace deal, we will always see a little bit of downturn, because the real fear is these supply chains are going to get backed up. Oil prices going to keep going up. It's going to be tougher for the world to do trade, especially in other nations like Asia, where a lot of our products get their supplies from. People can't ignore that. Even though Trump keeps saying we want to get away from it, it doesn't happen immediately. We know this, or else prices wouldn't be hiking like they are. As soon as Trump came into office, we should have seen some stabilization and a little bit of transition into us developing these things, but it doesn't happen overnight. So we still have to rely on Asia and those nations, and they all rely on Iran for their oil supply to be balanced and the Strait of Hormuz. Furthermore, if the ultimate goal is to get away from China, this war hasn't helped anything with that, because all it's done is increase the reputation of China. There's plenty of stats and data out now how people are viewing China as a superior nation than America. And that's really not good for the long term growth, progression, anything, any facet. Once again, That cannot be good when the world is viewing China as a basically the future of the world, essentially as a leading empire, the one that makes the right decisions and good decisions. And speaking on the stock market and market manipulation, we recently also received the news True Social, which is Trump and his family's social media company, just announced that they were willing to charge a fee for businesses and other people to receive Trump's tweets and other news much earlier than regular users would get, which is straight up insider trading. I've never heard of a feature like that, which targets, to supply businesses and people with information which will help them make a trade better. So that's insane that that was even being discussed openly. The market will continue to boom as far as any other analyst says, but we need to see some diversion of money towards mining, metals, oil supply. Right now, all that is down 35%, and that is not going to get us away from Chinese dominance. So all this capex that we're putting towards AI has to also kind of broaden, not just within the stock market investments that need to broaden out, the actual investments in capex to further develop these big mining facilities, oil facilities, refinement facilities. That money needs to be diverted that way also. Energy used to be 18% of the S&P, now it's down to 3%. And what's insane is we really need to solve this energy issue because it is also a big part of AI. So just focusing on AI and whatever the momentum is pushing up is the wrong strategy. We need to broaden out within the S&P, within the actual capex going to these facilities to expand our own development. Recently, Renaissance Macro Research gave some insane stats on what's happening with the trade. The stat really frames the scale of what we are living through. Domestic expenditures on artificial intelligence are on track to surpass the peak spending on US housing back at its 2005 absolute highs. We're talking about massive infrastructure spending approaching nearly 7% of the total US economy. Now, when traditional macroeconomists look at this, a lot of them shrug. They point out something called import leakage. They say, sure, US tech giants are throwing hundreds of billions of dollars at the wall, but the huge portion of that spending is flowing directly to overseas manufacturers like SK Hynix in Korea, which just went public in the US markets. With basically, they've been public in Korea, but they did this strategy where they were allowed to enter the US market also. uh, and other specialized hardware and energy component suppliers in Japan. Because those physical goods are imported, standards accounting dictates that they subtract from the US gross domestic product. It doesn't neatly show up as a massive surge in US GDP, but looking at it purely through a simple GDP accounting identity completely misses the point of what an economic boom actually is. Just because those dollars don't immediately register as domestic GDP doesn't mean they've vanished into thin air. A boom isn't defined by a sterile accounting ledger, it's defined by raw momentum of spending. That spending sits squarely on corporate balance sheets, it shifts corporate risk appetite, and it creates massive secondary linkages across the entire global economy. And these standard models are basically ignoring what is happening realistically. A lot of this growth is based on what's happening with the stock market. It's not enhancing real world stuff, especially with inflation. We're not seeing people's wealth growing on all facets of life. And the struggles of credit usage to make purchases, make monthly payments, and that type of stuff is a burden on top also. So whether this money is flowing and the economy is showing a boom only through the stock market is not really a factual way of looking at how money is spread throughout the economy to the average citizen. This is only benefiting those that are sitting at the top, those that have enough to invest on a regular basis. So cash flow is really important, and that's what people are lacking. And with this war going on, inflation is not going to go away. We're going to see it keep heightening up and the confusion increasing. The average person doesn't care about the import leakages, especially with all these businesses investing in new technologies. They're essentially giving a boost to the suppliers. They're giving a boost to their equity valuation. They're giving a boost to people that have equity within those businesses, like employees. And when these employees get their money, they're going to spend money on experiences. They're going to spend money in their local cities. They're not too concerned about the import leakage issue. So people are definitely concerned about the cyclical slowdown and like some type of fear element in their mind that this is going to end at some point. But that's been going on for the last 15 years. The market's been booming. Even during COVID, the recession lasted like 2 months essentially. But as far as the amount of wealth growth we saw with the government printing money and people investing, it did not compare. Business cycles are fundamentally risk cycles. So we will at some time face challenges, but what's happening right now is unprecedented. It's an immense boom, and we just keep seeing all this go up with the stock market. The core question for any investor really is this slowdown going to be linear or non-linear? Neil Dutta, one of the best business economists, this is what he has to say about that question. Right now, we're sitting in a very clear linear slowdown when it comes to the broader consumer. Consumer spending is grinding along at a stable but uninspiring pace, hovering right around 2%, sometimes a little above, sometimes a little below. Because underlying income growth has been sluggish, consumption is naturally losing steam. Left to its own devices, a linear deceleration means we drop from 2% growth down to 1% or maybe 1.5%. It's a soft landing, it doesn't mean we fall off of a cliff. But a nonlinear move is entirely dependent on the labor market. If we start to see meaningful, widespread corporate layoffs outside of the isolated tech sector, consumer spending will collapse overnight. Look at the latest data from the Bureau of Labor Statistics. Non-farm payrolls for June increased by a mere 57,000 jobs. This is a sharp deceleration from the downward revised 129,000 in May, and it completely missed the consensus forecast. When hiring freezes up like this, the margin for error vanishes. On the corporate side, tech firms see immense revenue growth and tight capacity for advanced models from players like Anthropic, giving them every reason to remain aggressively optimistic. But every single exponential curve in history eventually transforms into an S curve. The build out phase for data centers will eventually find its ceiling when the massive wave of infrastructure spending stops. The revenue growth supporting these multiples will flatten out. So that is a huge concern that everybody has. We just don't know when it's going to happen, how it's going to happen. What it's saying is that there is a macro disconnect between inflation and corporate workers. Inflation is sticky between 3.5% and 3.8%, which is far off from the Fed's goal of 2%. It's kind of a bizarre macroeconomic paradox. Basically, what we saw in the 1990s and 2000s, over time, things that were being produced kept getting cheaper, whether it was laptops, um, memory, anything related at that time during the boom was getting cheaper over time. But we're seeing the opposite right now. As this capex spending keeps going up, we're running out of supplies and materials, so the prices are going up. Memory has exponentially grown, and it's insane. And it's not actual hardware, even software prices are going up. So it's not related to even just the supply chain, it's even the level of production we're doing, where AI is supposed to be doing the opposite, right? If we're implementing AI, cost of at least developing software should be going down, where obviously we're paying less to engineers because we're using more AI, so payroll costs are either stable or going down, but they're not increasing. But the cost of buying the software is going up. So this will be immensely detrimental if we stay on this route. Domestic income is down 51% while corporate profits continue to increase. Their margins are just booming right now. Who's struggling? It's the average person in the small businesses. People can barely go out to buy groceries, pay for gas, make their payments on time. Everybody has a roommate. Younger people that are coming out of colleges are moving back home. People in their 30s aren't getting married. All this is being affected and tied to all of these issues. Corporate profits climbed over 12%, which is a high since the 1950s. The fixed income market is also reacting to this, with 2-year treasury yields hovering around 4.25%, with two core parts: expected inflation and real rates. The upward pressure on real yields has been a combination of inflation and how the Fed will react to it, because people are expecting the interest rates to go up. And this also is completely against what Trump wanted to do by, appointing Kevin Warsh as the Fed chair. His main thing was to bring interest rates down so we can spend more and leverage more. But inflation, the war, all these other issues, it doesn't seem like we're going to be cutting rates. We're going to be increasing them, which wasn't going to happen until Trump came into office. Luckily, high yield credit spreads aren't spiking. So that helps us out with, staying out with the thoughts of recession happening. Now, if that was happening with the combination of real yields going up and possibly rates going up, we would definitely be in the territory of recession fears. Instead of that, majority of the risk basically has concentrated itself into the equity markets, stock market, whether it's risky stocks, anything with high volatility stocks or momentum stocks. We're seeing a transition and the broadening, and that's a great result of it. But essentially, the core issue is not a great reason for this to be happening. So what's happening is the beta trade and the momentum trade is kind of becoming the same thing, and that's really bad because as you're riding the wave up, that's great. But when people start exiting, you see everybody also start exiting at the same time. And that's also the big fear factor right now is when will people exit this and when will the bubble pop? So if it all happens simultaneously with inflation up, with the rates going up, that will bring recession fears back into the thoughts of everybody. And alongside, if the rotation into the broadening fails, then people are going to pull that money out and go straight into cash because they're going to fear, with all the other factors in the economy, that they need to be liquid. They need to have some cash on them to pay bills and further just support their lifestyles. They're not going to be worried about saving and investing. And all of this leads us to the sovereign debt burden that our government keeps creating. The US Treasury is borrowing 155 billion every month, paying 24 billion a week in interest on a 39.4 trillion national debt. All the while, structural underinvestment in old economy commodities is down 35%, which is ultimately how Trump got elected. He wanted to bring back manufacturing, he wanted to bring back production capabilities, he wanted to bring back anything related with getting away from China. None of that is possible with such a big debt burden. How are you going to be investing in all these old economy features and broadening away from the AI investments and making the country grow and creating jobs if all this debt is continuing to compound with the interest? So, for the MAGA supporters, the Republican supporters, please understand, you are not confused. The facts and the data are proving everything that I am saying, that the economists are saying, that anything Trump's policies are doing is wrong. Just like Doge, it only lasted a few months and all it did was create immense disruption. Only a few people filled their pockets while the average citizens had to panic, had to lose their jobs, had to live under stress. And that's the day to day occurrence for everybody right now. It's hard to even go out to your local restaurant to eat and be able to afford a meal. It's hard to go to the grocery store without seeing prices continuously going up. Like all these facets are affecting everybody at the bottom. Restaurant owners like myself, the gas station clerk, somebody working in retail. All these jobs were supposed to be being helped by AI, but so far that's not helping it at all. Trump's decision with the war are not helping it at all. Anything with credit spreads not helping it at all. Even with the bond rates, nothing makes sense for long-term growth to progress. We're gonna keep suffering. We're gonna keep getting lies from the government, and all these politicians do is bullshit. And for the people who don't know how to engage and analyze the data, don't vote. That's all. There should be a new trend. For years, you've heard everybody should vote. Everybody gets to vote. Go earn your vote. It's a right to vote. I'm saying some of you people need to stop voting for the rest of your lives if you cannot engage and analyze the data, the analytics, the system, and understand everything from top to bottom, whether it's local politics or geopolitics.